Welcome back. Well, the focus of commodity markets, I would assume, is crude today. Manisha is waiting by. Manisha, the geopolitical problems are perhaps the center of your conversation now?
It totally is, yes, Lata. The crude prices have been very volatile. And if you look at 2023 as an year, we have seen $70 of a low and 97 of a high. We've been inches away from that $100 mark for a couple of times in this year now, mostly for the last couple of months itself. So the latest price gain comes in after US said that they have conducted a military strike in Syria. Remember, we already are dealing with a couple of war conflicts, one between Russia and Ukraine, the second between Israel and Hamas. There are tensions between China and Taiwan, and now 9 countries also, that is the Arab countries, are condemning the Gaza bombing. So the geopolitical stress is right there, and is the reason that you have seen $90 a barrel continue to hold. We did see 2% of a decline in the overnight market, but in the Asian markets, we are back above 1% and more there. The US GDP coming in at 4.9%, which is better than the expectation of 4.3%, also has been supportive in sense of demand cues going forward from here. Apart from that, the markets also are looking at better data that we've seen come in from China. This is the price cues that we've seen in this week. Even after with gains today that we've seen, prices are down 4% in this week. This is after 10% of gains in crude prices in last couple of weeks that we have seen. Also, no crude supplies have been disrupted until now because of the Israel-Gaza conflict, and that is what the markets took away in sense of premium there. There also is ongoing diplomatic efforts to ensure or delay on-ground invasion into Gaza by Israel, and that also has led to some support. Markets have seen the U.S. inventories, those gained up by nearly 1.4 million barrels. That also led to a feeling that there is enough inventory stock in the U.S. markets there. The high treasury yields ahead of the U.S. Fed meeting is yet another thing that has been weighing on many of these commodities. And then it is going to be the U.S. Fed meet in the next week. That would give you further directions coming in. Having said that, it is about the weak oil demand that we've seen from Europe and statements coming in from China, where they say that they are proposing a cap in sense of domestic oil refining to curb carbon emissions, is what tells you that the Chinese imports also could get hampered going forward. But as I said, all eyes now on the U.S. inflation numbers today and the U.S. Fed meeting in the next week, and that would give you further direction unless something happens this weekend.
Oh, yes, the PCE numbers are going to be very important, not just for crude, but for all markets, isn't it? Thanks.